we get started today. I've spent some time in the field as a financial advisor. I was in a full-service firm that provided all solutions ranging from securities, mutual funds, annuities, life insurance products, and also variable products. I did find a bit of a comfort zone with all aspects of the life insurance, and I've spent the last couple years here at Financial Brokerage assisting agents in the field, expanding and growing their businesses, anything from training and equipping to sales ideas to helping build illustrations or solutions for high premium cases. So today it's my privilege to share with you a sales idea that I hope each of you will be able to use in your own practice. I hope this will be informative, educational, and even a little humorous. So let's get started, shall we? I'd like to talk to you today about a new approach to life insurance. I'd like to bring a new idea that allows us to get in front of more people. As we all know, those of us that work in this strange industry, we have discovered that if you've been in the business any longer than, say, 2 days, you're probably aware that it's very hard to call up someone you know or knock on a door of a friend or an acquaintance and say, hey, I'd like to talk to you about life insurance. Now, they're likely to hang up the phone on you, or even before you finish your sentence, slam the door right in your face. And for those of us who don't want, or I should say, those of us who want to last longer than 2 days, have learned to come up with a slightly different strategy. We've developed things like elevator speeches, so we can simply and accurately define what we do for people in 2 sentences or less. But oh yeah, by the way, one key rule is we don't say the words life insurance. We don't want to repeat that unpleasant history. So instead, we say things like, I help people grow and maintain their wealth while all the while protecting their assets and the ones they love. Or if you're really clever and maybe even super corny, you could use this one. I'm a retirement travel agent. You tell me where you want to go and I'll help you get there. So now that might make us chuckle a bit, and the bottom line is we've created something to work from. We've created a hook. Now every catchy song, movie, or TV ad, or they all have the same thing in common. They have a hook, and that it's that element that allows you to capture someone's attention long enough to get your point across. And make no mistake, they're all selling something, and of course we are too. We're selling financial safety, growth, security, and in many cases we need to get people's attention, so we also need a hook. In fact, maybe we need a hero, maybe even a superhero. So let's be the hero for our clients that they need us to be. Let's take a look at the landscape out there with Americans in retirement. Fear and panic has spread through our country like an epidemic. Americans are having trouble saving. They're arriving at age 65 with less money saved than what is needed. They have to work longer, or they need to live on less. So what is one to do? Do I keep pumping money into my 401k, which has now been joked about as being my 201k? Do I trust the market or my stockbroker? He never seems to call me back, and last time I looked, he was standing on the ledge of a 30-story building. So I'm pretty sure that's not a very good idea. Do I trust in banks? Do I stuff money under a mattress? Decisions. So what's taken place? The government has, in their infinite wisdom, given us some possible solutions to aid the public in our quest for a positive retirement. We have available to us traditional IRAs. Okay, not bad. Let's see. We have a list here of some pros and cons. You can basically have tax savings today, get taxed way later. We've got tax-free growth, but it must remain in there until 59 and a half. And we can't hold it too long, or the government will make us withdraw it as RMDs, or the required minimum distributions. They get so picky when it comes to those taxes, don't they? And oh yeah, more rules. Don't make too much money or you can't play ball. And if you do qualify, we don't want you putting in more than the limit, $5 grand per year. So we're all familiar with those. Here's what happened in 1998. Someone in our government, William V. Roth, Jr., to be precise, proposed legislation that we enhance or upgrade the IRA. You guessed it, it's the Roth IRA. Now, a pretty good deal here. If you look at it, got a lot of the same things. It grows tax-free, and when you want to go get it out, it's also tax-free. But not so fast, because nothing can be perfect after all. The government said, well, let's at least tax it now since it's going to be tax-free later. And since we're tax-free later, let's make sure we keep a lid on who can do this. Not people making over approximately $125,000 a year, or couples making approximately over $180,000 a year. And once again, let's put no more than $5,000. That's the limit. So let's make sure no one thinks about getting access to this money any earlier than 59.5, because we said so. And if you do, we'll penalize you 10%. So again, good things, but a few limitations there. Now, some of you may be saying, but Justin, what are we doing talking about all these retirement accounts? We're talking about contribution limits, RMDs, tax penalties. I'm an insurance guy or gal. I don't know about all this stuff. Well, I'm not going to lie to you. You may need to brush up on some basic retirement account lingo. Get familiar with the ins and the outs of the IRAs, some basic tax facts. I'm here to tell you that if you can have an intelligent conversation with people about taxes, about retirement, or even Social Security, they will listen to you and give you a chance to see if you can help solve their problems. So okay, let's check this out. This is one of the main reasons I chose this sales idea. I believe some of the groundwork has already been laid for us. What do these three people have in common? Up there we've got the politician, we've got the CPA, the tax advisor, and the average Joe. Well, the thing that these three have in common is they already think that the Roth IRA is a very good thing. And that's good. See, again, ever since I've been in this business, I've always noticed that people always perk up with excitement, and they put in their own 2 cents on the subject of the Roth IRA. Now, I don't know if they know all the ins and outs and all the moving parts, but there sure does seem to be a consensus out there that tax-free is a very good thing. And maybe even sticking it to the government once in a while isn't half bad either. So you see, once again, the groundwork's been laid. Most everyone that you meet with has heard about this great investment idea. In fact, many people you talk to are probably already contributing to a Roth IRA, to which I say great. Applaud them for doing such a smart thing. But now let's again, here's the transition. This is where we can show or point out its limitations. The Roth, as good as it is, still has holes. It still has some problems, some limitations. And let's remind them of that. Number one, you can't have too much of a good thing, only $5,000 per year. Number two, don't make too high of an income or they won't let you in. Don't even think about taking that money out of this account until you're old enough because, again, this is a retirement account and we said so. But what if, and again, what if we could take all these great things that exist in a Roth IRA and even improve upon them? What if we could take away some of the negatives? Then what would we have? You may have already guessed it. We have the Super Roth. So if you got that right, give yourselves 10 points, gold stars, however it is you get measured out there. You are absolutely right. Here's how it works. We are going to fund a financial vehicle with after-tax dollars. We're going to have that money is going to grow tax-free. That money can be accessed tax-free. Does it sound familiar so far? Here's the good news. We can fund it with as much money per year as you want. If you earn a high income, no problem. If you want the money before you retire, in many cases as little as 10 years from now, that's fine. And will you be taxed for taking it out? No way. And oh yeah, by the way, you also get a death benefit to the beneficiary of your choice as well. Now, is this cool or what? We took something that the client was already viewing as positive, and we made it even better. Now, what I'm talking about here is what? Cash value life insurance, and more specifically, indexed universal life. See, up until now, I haven't even used the words life insurance. Up until now, I haven't had to. You see, I'm not selling life insurance. at least not in the traditional sense. I'm selling an idea, a concept, something that resonates with your clients. Do you think they want to hear another presentation like, well, I guess you have a mortgage of about $200K and one child, one on the way, and I'll get you some numbers on some 20-year term, and in case something happens to you, your spouse will have a little something, blah, blah, blah. Okay, I get it. There's a time and a place to sell term, but let's try to expand some of those presentations that we're doing for our prospects and see where that leads. All right, let's take a look at some of the benefits that this presents to our clients. Now, before I get into this, let me first say, for the sake of this webinar, I'm not going to refer to a specific product or carrier. That's not my point here. But again, I am talking about Index Universal Life as a whole, and we'll basically speak about it in general terms to keep this simple. I recommend you do the same when talking with your prospects, but you always want to keep your options out there before you. So, again, benefits to clients, more flexibility and control. Always keep in mind that these products can be run with almost unlimited scenarios, with flexibility in how you fund it per year, withdrawing money, stopping payments, etc. More retirement income. This is probably the #1 reason why these products were designed, created, and sold, is its ability to grow cash values and supplement or outright fund one's retirement by accessing those cash values within the policy. #3, the college funding option. If properly planned and funded, these policies can be of real value to help fund for college to the policyholders. Now, one great thing to add into your presentation here is that so many people have been led to believe that 529 plans are the main or maybe the only way to set aside money for college, when really this may not be the better way at all. It might actually be cash value life insurance. When students are applying for financial aid, guess what gets factored into that equation? Yep, you guessed it, 529 and other college planning vehicles that have been set up. Guess how cash value life insurance is viewed? It doesn't count against them whatsoever. That is your personal money. It's not attached to college. That's how it's viewed. It can be a definite advantage for your clients. Now, if you're going to discuss this option, make sure you have at least maybe a 10-year window of time to fund and grow this money. This is more likely to give your client the type of success that you're looking for. Okay, and finally, death benefit, security for your survivors. Remember, we've been saying all along that we bring value after value here, and then finally we mentioned this has a death benefit as well. This is a good time to point out that we actually are taking life insurance and we're finally putting the word life or the concept of life back into it, meaning we're giving living benefits during their living years, as well as protection if something were to happen when they die. It's also a good thing to note that IULs, you've got basically 2 death benefit options. You've got option A or option B. A, as many of you know, is level. B is increasing, which means that at any given point in time, you're going to be able to have the cash value plus the death benefit if something were to happen to your client at that point in time. Just that, you don't always have to get into the ins and outs of these, but, be prepared to understand where these scenarios work best. Okay, so we've talked about benefits to clients. Now let's take a peek here. Benefits for you, the agent, the producer. #1, more and bigger life sales. Well, hey, I like the sound of that. How many of you would like a pay raise this year? And I'm sure if I could look out there and see hands, I would see hands being raised up. These cases might pay you 2, 3 times more, maybe 10 times more than what some of you may be used to writing. Wouldn't it be nice to write a few more of these a month? For many of you, maybe you are selling some IULs, but maybe you've heard something here that's clicked, and hopefully we can help boost your sales. #2, it cements the relationship with your client. You see, what you've done here is you've provided more than just death benefit security. You're helping people starting to build wealth. Again, they may use this for college. They may use it for retirement. They may have money accessible to them if they lose a job in a few years down the road. Think about that time. Here we are in this tough economy. People get laid off. They look to a bank. They look for somebody to give them money. The bank's probably not willing to give it to them. But with their life policy, yes, they would. So again, it allows them freedom and flexibility. Cross-selling opportunities. Maybe as you've met with your clients, you've discovered that they have other pressing needs. Maybe it's long-term care. Maybe it's disability. Perhaps you've discovered that they've left a job, have money sitting in 401k. I'm pretty sure that a lot of you out there probably could find a sale there in an annuity situation like that. It's like so many other things in our business. If you are in front of people, constantly talking with people after people, opportunities are bound to happen. Okay, you just have to uncover them, do good fact-finding, ask them a lot of questions. You may end up completely different than where you started out, but again, trying to help the bottom line here. Referral introductions. When someone's excited about what you've done for them, they will tell others. I mean, I can hear it now. People telling others that they've heard of this Super Roth thing that they have, and you need to call my agent. You need to get one too. Building for future sales. Even if this doesn't lead to a sale for you today, that doesn't mean it's over. It doesn't mean the end of the story. Hopefully, you've done a good job of getting them excited about this product, what it can do for them, and for whatever reason, maybe again, it's a down economy, maybe they're in job problems, it doesn't fit them right now. They're not in a financial position to do something about it, but they have an eye on it in the future. Maybe they get promoted later on, they get a better job, they've get something paid off, and now their income is allowing them to pay for a product like this and sock money away. That's where you keep up with your clients. You do those those appointments, and you come back to it. Future sales. Okay, let's identify who might be some of our best prospects. Well, hopefully this is an easy one. High income earners. I'd like to tell you that this is for everybody. But if you're talking to somebody who can't rub two nickels together, this is not really for them. These products are designed for people with good incomes and who are also not on death's doorstep. I mean, obviously this is life insurance. We still have to go through underwriting. So, keep that in mind too. Some of these illustrations just are not going to run at a very healthy clip if your clients are table D or, table F, almost declinable. So that's just the reality. Others you're going to find on this list. Business owners, CEOs, doctors, lawyers, professionals, successful blue collar. Why do we want the small business owner? Well, we want the small business owner because it's very likely that they don't have a traditional 401k plan. They may not have a simple, probably nothing formal at all. So they're going to need something like this, a place to put their money for retirement. The others all make sense. You want to deal with people with good incomes and at the very least, decent incomes, very little to no debt ratios. You'll notice I left out engineers here. If you have a full 12 months to work on one case with an engineer and answer all the questions that they're going to have, then more power to you. So, I say that jokingly. Some of you may do a very good job with engineers, and I applaud that. But for those of us who've worked with one or two, you know what I'm talking about. All right, now let's talk about getting in front of these people. Maybe it's as simple as a phone call or in person. Maybe it's something like this. You drop in on someone in your book of business who's a business owner. Could be a cold drop in. Either way, something like this. Hey, I've got some great new ideas that is designed to help small business owners like yourself get a head start on retirement planning, unlike anything you've ever heard before. I just need 15 to 20 minutes of your time. Would today work, or should I stop in, Friday morning? Something along those lines. Existing clients, again. I know we did some good planning in the past. I was wondering if we could get together to discuss a new idea had for you. I really believe it would enhance your situation. Would Thursday afternoon be good? Mailers, seminars. Put on a seminar with basic PowerPoint, that highlights all of these features. You could rent out a party room at a restaurant, simple snacks, finger foods. It doesn't have to be fancy. Maybe it'd be as fancy as you want it to be, but get prospects to show interest, set the appointments accordingly, get them in there, go through these things, make a simple, presentation similar to this. Again, keep it conceptual, get them interested, don't get bogged down in all the details. All right, here's my keys. Keeping it simple. You hit the main points, you hit the concepts, you get them excited, and you stay on point. Remember, if you're excited, they're going to be excited. If you're bored to tears, guess what? They're going to be bored to tears. But I have found great success in talking with people and getting them interested. Again, what you'll find is if they're the right type of client, it will help them to jump into it when they get it. You're going to also find that some people, it's not the right timing for them now. But again, if they're excited, they're either going to do one of two things. They can help tell others about it, or they're going to think in terms of, down the road, I'm going to call you up and we're going to discuss this and maybe it'll be the right fit then. Here's a big one. Don't get bogged down in the minutia of the illustrations, policy fees, the index, accounts, and loans, and all that madness. Answer the questions when they arise. Be a student of this. I'm not saying, on the one hand, I am saying, does it really matter? On the other hand, I'm definitely saying, don't be ignorant of these things, but don't make it a point to get into these things in the appointment, because I really think it will bog it down. It'll end up being, just too confusing. And the answer to confusion, as many of you know, is do nothing. So, don't get into the Euro stock and the Hang Seng and the 5-year index bucket and what this, that, and the other. You start talking that stuff, you're likely to lose them. You want to give the impression and the approach, I got it. Most clients that I deal with do this. Those are the simple answers to those deep, detailed questions. Anyway, next point. Have a little fun. We sort of talked on this. Again, if you're smiling, they're smiling. If you're having fun, they're having fun. But this, again, these concepts are going to help them. This is the path to them getting. It's a difference between their kids getting paid for education, or it's a difference between them, having an affordable retirement. So, again, if you're presenting this as the unique way to achieve these things, then they're going to feel it as well. And bottom line, make a sale. For crying out loud, this is why we work so hard. Make some money. It's not a hobby, or at least it shouldn't be. So I know many of us probably feel that way from time to time, but yeah, do all these things, and again, you're going to draw interest, and it should lead to some sales. In closing, I do hope this help struck a chord with many of you. Thanks again for allowing me to share these ideas. I had a lot of fun putting it together and a lot of fun presenting today. So at this time, I'm just going to take a peek here to see if we have any specific questions. If you had any in mind, you can shoot them my way. Just take a moment here. I'm not seeing any just right off the bat, which probably means I did a fantastic job and cleared up everything. So again, these concepts, if you keep it at the higher level, letting them know this is what life insurance can do. This is a new spin on life insurance. Again, if you're doing it right, you're not even discussing the word life insurance until maybe close to the end. So, not really seeing any questions at the moment, which is absolutely not a problem. If you do have any questions that do arise, I want to make sure everyone knows where to find us. This is our number here at Financial Brokerage. Many of you do business with us. Maybe some of you are new, but the number is 1-800-397-9999. You can ask for myself, Justin Reeves, or any life marketer, and we'd be happy to discuss your situation. So once again, on behalf of Financial Brokerage, thank you to all the webinar participants today. If you have any questions concerning the webinar, please call that number on the screen. I want to remind us all the next scheduled Financial Brokerage Sales Edge webinar will be on Wednesday, May 2nd on Hybrids, the Innovative Way to Sell Long-Term Care. That's with Brian Leising and Matt Nutzman, both with Financial Brokerage. And if you've not received your invitation, you may contact one of your marketers. Have a very productive day. Thanks again.